Hello everyone, this is Rakesh Kaples again and I welcome you all in my today's class. So as in our previous video we were on the way of doing the financial management and in which we have discussed what is the meaning of financial management and what is the role of financial management and what may be the different types of strategies or different types of you can say decisions the financial manager have to take. So now we will discuss what are these three decisions and what are the different types of scenarios relating to these decisions. These are called financial decisions. As a financial manager, what are the different types of decision one financial manager has to take? The very first decision is the decision regarding investment. Investment decision. Investment decision may be defined as a decision in which the financial manager have to decide that in which type of assets or resources the funds will be utilized, the funds will be invested, and these investment decision is also called capital budgeting decision. In this decision, mainly the manager have to focus on these two things: how much funds are to be required to be invested in long-term assets, means long-term investment decision, means on land and building, plant and machinery, furniture and fixture, and these types of long-term assets. Second is short-term investment. Short-term investment decisions are those decisions which are relating to the to judge how much funds are to be utilized in current assets and stocks, in cash, bank balance, and these short-term decision relating to investment is also called working capital decision, working capital management. So if any manager is going to decide how much money is to be invested in which type of assets, what may be the different types of factors one have to keep in his mind while making or taking the investment decision. The very first is cash flow of that project. Means a manager should invest in that project, in that asset, first of all, which will give the good cash inflow. Suppose if one project is giving 10,000 per annum for 10 years and second project is will give 15,000 rupees per annum for 10 years, then the project which is giving you the more resources in form of cash return, that will be preferred. Second is the rate of return. That source should be selected. Like I have to invest in different sources. I can invest in land and building, I can invest in plant and machinery. So I should invest in that project, that investment criteria where the rate of return to the business is higher. Good. The last in that case is investment criteria or investment option. What type of option is available for me? Like if I am living in that area where stock market is not there, then I cannot invest in the shares and debentures, right? If stock market is easily approachable and easily available, then I can invest in shares and debentures. This is investment options, which are the options for me to invest. This is the investment decision. So after making the investment decision, means how much money we need to be invested in different types of sources. The next decision is the financing decision, and financing decision may be defined as the decision regarding the selection of source of the finance, कि हमने पैसा कहाँ से इकट्ठा करना है. Because when we used to decide about the financing, there may be two types of sources. One is called internal source and second is called external. Internal source is called equity and external source is called debts. So now here we have to make the combination of debt and equity. Which source? Company will never prefer that whole amount should be utilized, will be obtained from equity or whole from the debts. Company have to make a proportion or a combination of these two resources. So what may be the different types of factor which will decide कि हमने कितना पैसा कहां से लेना है। नंबर 1, कॉस्ट। We should prefer more and more that source whose cost will be low. जिस सोर्स की कॉस्ट लो होगी हम उस सोर्स को ज्यादा प्रेफर करेंगे। सेकंड इज रिस्क। Where the risk is higher, that source will not be preferred as compared to the source where risk is small. Like you can take the example of shares. In share there is no risk because company will give the dividend only in that case where the profit is sufficient. But in case of debentures, you have to pay the interest. Then control consideration. If company want to expand the control, then shares should be preferred because shareholder having the right to participate in the management. If company want to make the contraction or company is not interested to expand the control, then debts will be preferred. Debts means debentures, bank loan. They don't have the right to interfere in the any matter of the company. Then cash flow position of the company. If the cash flow position of the company is good, then company can go for the debts because debts के ऊपर तो interest आपको देना पड़ेगा. Company cannot escape itself by saying that this year we don't have the profit, so that's why we will not give the interest. So if good cash condition is there, you can prefer the debts. But if the cash position is not good, then company can opt for the equity shares. Level of operation. If the company is operating at a very high level, then company need a long-term financing, and the long-term financing having a best option in form of equity. Last is state of capital market. Like what type of situation is prevailing in the market. Suppose in case of bullish market, if the market is bullish, in that case company should prefer more and more equity. But in case where the situation of the market is bear, then less focus should be on the equity and more focus on the debts. This is relating to financing decision. आपने इन्वेस्टमेंट कितनी करनी है उसका आइडिया भी लगा लिया, आपने सोर्स के थ्रू पैसा इकट्ठा कर लिया. नाउ द नेक्स्ट डिसीजन इज द डिसीजन रिगार्डिंग द पेमेंट ऑफ डिविडेंड टू द shareholder. Means it is the decision regarding, you can say, distribution of the profit in form of dividend to the shareholder. Dividend decision, the decision regarding payment of the dividend to the shareholder. And what may be the different types of factor which will decide how much dividend we will pay, whether we will pay or not. The very first is earning. If company having a earning, then company can pay the dividend. If no earning, no dividend. Second, stability of the earning. If company is earning a profit at a stable rate, then company can follow a routine or parallel, or what you can say, a stable type of dividend payment policy. Third, growth opportunity. If there is lots of growth opportunities are there for the company, then in spite of giving that money to the shareholder in form of dividend, company will choose the growth opportunity. Means company growth के ऊपर focus करेगी, dividend pay नहीं करेगी. Then stability of the dividend. If the company in the past experience is following a stable payment of the dividend, continuous payment of the dividend, then company will pay the dividend. Then preference of the shareholder. What the shareholders are thinking. If the shareholders are thinking that they should be given the dividend, then dividend will be given to them. If the shareholders are focusing that they should not be given the dividend, they prefer to make the growth of the company, then the lesser amount of the dividend will be given to the shareholder. So these are the three types of decision which a financial manager have to take in financial management, that is relating to investment decision, financing decision and dividend decision. Thank you very much.